A volatile week on Wall Street following the fifth interest rate hike from the Federal Reserve this year has some investors and economists concerned a global recession could be looming. ABC's Deidre Bolton has the details.
Stocks tumbled Friday, the Dow Jones closing down almost 500 points, finishing below 30,000 for the first time since June 17th and at its lowest level since November 2020. S&P 500 shedding more than 4.5% and the Nasdaq down more than 5%. Energy markets also taking a big hit. Oil prices fell following a series of interest rate hikes around the world. Many investors and economists are concerned we may be heading for a global recession, which would lower fuel demand. U.S. crude closing below $80 a barrel, its lowest level since January of this year. The market turmoil comes as the Federal Reserve continues its efforts to curb inflation, raising its benchmark interest rate 0.75% earlier this week.
We have got to get inflation behind us. I wish there were a painless way to do that. There isn't.
This marks the fifth time this year the central bank has raised rates, making it more expensive to borrow money. The hope is that demand for goods and services will cool and therefore temper inflation. Americans paid 8.3% more for goods in August compared to a year ago. Rising interest rates are bad news for home buyers. The rate on a 30-year mortgage now double what it was in January, now above 6%.
The housing market doesn't do well in a rising interest rate environment. And that's because consumers are relying on mortgages in order to become a homeowner. And what we've seen since the start of this year is that millions of Americans have now been priced out of homeownership.
Also affecting consumers, the average interest on credit card rates now stands at about 18%. Deirdre Bolton, ABC News, New York.